Hello, everyone. Good morning, good afternoon, and good evening, depending on whichever part of the world you're tuning in from. And I'm so excited to welcome you once again to yet another promising edition of my Forex Morning Mastery as we take a fresh new look at the financial market. Well, it's drizzling right here, and I think it's affecting the connection at the moment as I'm having intermittent disruption in the internet network, and I've tried my other router, and it appears the same thing is going on. So I just hope that things will work out as planned here this morning. So I would like to get some feedback as regards to that. I want to know what it's looking like from your own end. Is the key insight into the historical price movement of I just hope things will get better. I just switched to my second router. Let's see how this is going to work. The weather is quite fuzzy here. It's raining, and I think the weather is affecting my internet reception. I would like to know if things get better along the line. So I just switch my router to the next one. Please let me know in the comment section if it's okay. I will take some couple of minutes to see how this works. I will try to monitor the strength of this signal while I also wait for a feedback to confirm that we are good to go here. So can I get feedback as regards to this one right now? Is it fluent? Is the video good? Is the audio okay from your own end? Please let me know. I think it's getting better here as the consistency in the reception is looking promising at this point. All right, so I just want to assume that it's going to be as good as I'm seeing it from my own hand here. Uh, uh, okay, thank you very much, OT Raf. I also hope it gets better. It's raining right here, and I think that is affecting the internet reception in this part of the world. All right, so once again, I welcome you all to yet another promising session on the Forex Morning Mastery with Sheriff Daramola. And as usual, we are going to be, for the next 30-40 minutes, we should be delving into the financial markets using simple parameters such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of the assets on our watch list. Well, since the beginning of the week, we have been monitoring three major assets, which are the USDJPY, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And in fact, in the last 24 hours, we begin to notice that the US dollar is struggling to gain demand, especially in anticipation of Chairman Powell's speech, which is coming up later in the week. That's on Friday. And of course, the Jackson Hole Symposium, which is of course coming in on Friday too as well. So I think as a result of this, I think there is a news behind the scenes going on that has incited this new development we are witnessing in the market, as there is more preference for risk sensitive assets such as the gold, commodity and the likes. And we shall be looking at how we will be anticipating trading activities for today, just using the current market structure, looking out for patterns to identify how we shall be positioning ourselves ahead of today's trading session. So with that being said here, I would like to dive right into the business. I'm trying to wait and see if the network will get better. And okay, so let's move right into the business for today. So as usual, we are going to be delving into the economic calendar so that we can have a better perspective into what majority in the market will be looking forward to today. And of course, we know that these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable insight into how we can position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So here on my economic calendar, I just got that. Okay, so let me refresh this page. Okay, so we will be focusing on high impact event from the economies that affects the assets on our watch list. And these are the United States, the United Kingdom, and of course, the Japanese economy. So we shall be looking at this week. And I think the last time I checked, okay, today is 23rd, right? So, all right. So we have some S&P global publication which happened earlier today from the United Kingdom economy. So we had the CIPS composite PMI. The CIPS composite PMI, for those who don't know, is a key economic indicator that offers insight into the overall health of the country's economy by combining both the manufacturing and the services sector purchasing managers indices. Now, from the data we have here, it's not that promising from the United Kingdom actually, and I think this has already, we begin to see some traction in that regard on the GBPUSD especially. So we also had the CIPS manufacturing PMI and the CIPS services PMI, all of which came below expectation, giving us negative deviation in that regard. So we are going to be looking at how the market has reacted to this event and how we shall be preparing to capitalize on the next line of action on that one. Then later today, in about 3-4 hours from now, we shall be having the S&P global manufacturing PMI coming in from the United States economic docket. And for those who don't know, the global manufacturing PMI is known as the Manufacturing Purchasing Managers Index, which indicates the health of the manufacturing sector. And of course, a higher reading is considered as positive for the US dollar, while a lower reading is considered as negative. Now, the previous data here came in at 49 for the month of July. So we have economists projecting 49.3 for the month of August. So we shall look forward to see what the actual data will be. Then we also have the global services PMI, which will happen simultaneously, and this gauges the well-being of the services sector. And of course, a higher reading is considered as positive, while a lower reading is considered as negative. And from the data we have here from the month of August, we have it at 52.3, and the economists are projecting 52.2, which is a little bit within the same range with the previous data. So we're going to be looking forward to what the actual data will be. But as technical traders here, what we want to do is to sniff through the current market structure to identify structures and patterns that we can use to give us an insight into what the big players are doing. Of course, they leave trails in the market, and this would reflect on the chart as technical patterns and price action, of course. So we want to look at how we can capitalize on this to position ourselves in such a way that we can catch that move prior, during, and even after the event. So with the information we have gathered here, we shall be diving right into the chart. Okay, thank you very much, Richard Blackett. I saw your comments. Thank you very much. Jim Dares, thank you very much too for your feedback. I really appreciate that. Adeniyi Babalola, good morning to you. Thank you very, very much. So with that being said here, let's dive right into the business. So the first asset on our watch list today is going to be the GBPUSD. And in fact, we have a very complicated, I will say, setup going on in the market right now. I had a buy position this morning, but unfortunately the buy position has been taken out in a loss, and we have the sell position triggered as soon as price action broke down that 1.27250 level. About I think about 15 minutes ago, we had this sell position triggered after taking that loss on that position. So let's run through my commentary this morning as regards to how we intend to manage this position. And for those who are with me on both my TradingView and Telegram platform, you definitely will have gotten this update, and I hope you have acted upon it. So let's look at the GBPUSD this morning. What did I say about the GBPUSD, and how do we intend to manage this position this morning? So here we are on my TradingView platform. So I will just allow this to load up. And so this is how we have been managing the GBPUSD pair since the beginning of the week. And this was this morning right here. So I said, after a robust bearish momentum observed in the pound sterling yesterday, signs of buy pressure are emerging as price action interacts with the previously identified ascending trend line just around the 1.27250, which I laid emphasis on earlier. This situation suggests the potential for price to respect the trend line, possibly signaling a resumption of the uptrend. Refer to the chart for key levels and indications of potential trading opportunities encompassing both buying and selling scenarios. Now let's go back right into the chart right now and look at what we have here. So this was what I projected here this morning as regards to the setup. The first thing here is the ascending trend line, which we emphasized at the beginning of the week. Remember, we had this ascending trend line figured out, and price was finding higher highs and higher lows, and it was supposed to be one of the key determinants that will guide our trading activities for this week. And of course, when price remains above the ascending trend line, we want to look out for patterns and structures that will support the idea of buying. And we are not going to be selling unless the trend line is broken to the downside. So while I was sharing my update this morning, this was what I saw. I saw buy pressure around here. Look at what happened after the sell momentum taking us out of the buy position yesterday. We saw buy pressure resume just right exactly above that ascending trend line, giving me the impression that buyers might likely be taking over the market. So as a result of that, I did and told us to have a buy position above the 1.275, which actually triggered, and price moved about, how many pips was that? moved about 14-15 pips before the bearish momentum came in, taking us out of that sell position, of course. And I also made mention here that if that is going to be the case, if price goes against us, a breakdown of both the ascending trend line and the 1.27250 will be a good opportunity to join a bearish move. And I do hope you are able to position yourself in that regard to capitalize on that move. And if you have done that, you must have recouped the loss we incurred this morning on the buy position we took. So currently, for those who had capitalized on this one, you will be having about 45 pips running in profit right now. So the next thing I will be saying to do right now is to move your stop losses to your entry point. Let's secure this position just in case anything like sudden reversal happens here. The worst case scenario we will be taking out of will be at break even. Now we also have another level at the 1.27100 area. Remember, this was our key level for the week, and this was duly emphasized on in my video on the GBPUSD, which I shared during the course of the weekend. For those who have not watched that video, I implore you to watch that video, as it will give you a background knowledge into how we got to where we are this morning, and of course it will serve as an educational guide in understanding how to use price action to identify trading opportunities. Now that we have a breakdown of our key level, you know, when we have key levels broken to the downside, we of course want to now look out for patterns and structure that will support the idea of selling. So for the breakdown of the 1.271 right now, I want to see some retest of structure happen at some point before I want to be adding more position here. And the reason why I am saying this is simply because of how the GBPUSD has been very unpredictable in the last 3 weeks, even after the GDP data that came in about 3 weeks ago on the positive side. So price has been range bound actually for the last 3 weeks, making things a little bit difficult to identify significant movement in price action. So on this one, I would want to see price come back to retest structure to give us signs that sellers are still very strong at this point in time. So we have a couple of trend lines here that we shall be using, which of course you want to be marking out on your chart, as we shall be using this as a reference point to guide our trading activity. Now the first one here is this ascending trend line, which supported that bullish momentum before it was just broken to the downside. And then we have this descending trend line, which we spotted at the beginning of the week, and of course price action is back below that area. For me, I will call this seller's territory at this point. And from a technical standpoint, when price action breaks out of a key confluence such as what we have right here, so we have the breakdown of the ascending trend line, we have the breakdown of the descending trend line, and we have the breakdown of both the key level and the 1.27250 area. Now, when price action breaks out of key structures like this, we expect that at some point in time, price will come back to retest either of the structure to inside the downtrend scenario. So at this point in time, things are looking very bearish. So for those who had missed out on this first sell position we had here, you want to remain patient, waiting for new structure to mature and emerge before we jump into any sell position here. So one of the things we are going to be looking at this junction is either price comes back to retest the 1.271, which lines up with that descending trend line, or go as far as this ascending trend line, which was broken a couple of hours ago to inside the downtrend. But one thing we are going to be looking out for is like a reversal pattern, signs that buyers are finding it difficult to climb back above the ascending trend line and the key level, which will reflect on the chart as maybe it could come in the form of a double top, head and shoulder pattern, rising wedge, any reversal pattern you can think of, then we can join that bearish move to the downside. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates on what I think will happen when price action give us the green light to jump into a position here. So on the GBPUSD, we hold on to a bearish bias at this point, And the only condition that will make us consider buying the GBPUSD is for price action to climb back above that ascending trend line like a breakout retest before we can consider buying here, which I doubt will happen, at least for today. I don't think that will happen, but if it does happen, we want to be on standby to buy. But at this point, we hold on to a bearish bias, and let's see how far this momentum is going to go. And for those who already took advantage of the breakdown of the 1.2725, kindly move your stop loss to your entry point, secure this position while we wait out for more opportunities. If you have any questions regarding what I just explained here, feel free to let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset. But if you still have any questions, feel free to drop them in the comment section. I will be checking it from time to time. Moving on, the next financial asset on our watch list for today is the XAUUSD, popularly known as the gold spot, and this is my favorite asset amongst all the assets I normally monitor on a weekly basis. And in fact, since the beginning of the week, we have been buying this asset, though we had some moment where we sold. I think, did we sell at all on this one? I think we sold yesterday afternoon, I guess, but yes, we sold. Exactly, we sold. I can still remember. For those who are with me during the XAUUSD live monitoring window, during the New York session yesterday, we actually had some selling position at some point before we joined the second wave of the bullish momentum that we are currently witnessing at this point. Now, before I go into the details here, the first thing I would like to do is for us to go through how the week started for us and what incited the idea or the decisions that we made throughout the week. Now, for those who have not watched my video on the XAUUSD, I implore you to watch that video, as I wouldn't be able to go through all the details from the higher time frame. So you want to watch them. The video is right in the description box. In this current video you are watching, they are duly timestamped, so you can easily click on whatever chapter that is of your interest amongst them. So at the beginning of the week, the first thing we acknowledge here was the fact that price action has been bearish since the last couple of months, I think, and as a result of this, we had this descending trend line. In fact, we have a couple of this descending trend line here, which has been supporting that bearish momentum. And in fact, as long as price still remains below the trend line, we will have no business buying that asset. But one thing I saw here at the beginning of the week, we saw this scenario here where sellers begin to struggle to break through the 1,885, which for us was a signal that buyers are likely going to be coming in. And we saw the first signal here last week, Thursday. We saw what happened here at the beginning of the week. We saw a higher low within this area, giving us a confirmation that the trend lines is likely going to be broken for this week. Then in addition to that, we also acknowledge the nature of participants in this market, how they actually reacted to the zone. So during the first 10 hours of the week, we saw this consolidation phase here where price action was confined within the 1,891 and the 1,885 level to give us an indecisive phase. And of course, you know how we do it in this community. Whenever we have a flat range like this, we want to remain patient, waiting for price action to give us a signal, which will come in the form of either a breakdown of the support line or a breakout of the resistance line for an opportunity to trade. And in fact, what we saw this week was breaks out of the resistance line most of the time. We had our first buy position here. Price broke out of the resistance line, and of course this descending trend line we have here, further confirming that bullish momentum is getting stronger. Then after the breakout of I'm sorry, guys. I had to switch my router. The network went out, and I'm sorry, but I'm glad we are back again, and I hope that we will be able to use this till the end of the session before any other interruption comes in. So we were talking about the XAUUSD and how the market has respected as transitioned as expected throughout the course of the week. So we had a buy position at the beginning of the week where we were able to scoop in a significant amount of profit. Remember, we took at this point right into this level. Price moved about 130 pips on that single move. We also added one more position at the breakout of this area, giving us about 80 pips. And then we also added one more at this area, which of course did not last long as we had our stop loss in place and all of the buy position was taken out at the resumption of that bearish momentum, giving us about over close to 200 pips in profit, at least for the first half of the week, which is not bad at all to start the week. And for those who took advantage of that opportunity, well done to you for capitalizing on that move. And during our live session yesterday, I told us all that the breakout of the 1,900, for those who were with me yesterday, you would remember vividly, I mentioned that this breakout of the 1,900 could turn out to be a false breakout. And if price action breaks down the 1,900, that for counter trend traders, those who feel comfortable taking counter trend opportunities, we can capitalize on this move all the way to the downside. Well, I told you I'm not going to be taking it because I'm going to be seeing it as a retracement of the breakout of that descending trend line we identified earlier. And you know, from a technical standpoint, when price breaks out of the descending trend of a structure such as its descending trend line, we expect it to come into that structure at some point with a couple of buy pressure to incite an uptrend continuation. So I wasn't part of the sell position, but some of us took the sell position, hereby gaining about, how many pips was that? We had about 100 pips on that first one, and the second one here about 50 pips, so about 150 pips. So counter trend traders, scalpers who took advantage of that opportunity, well done to you for being on standby to catch that one. And during our live session yesterday, during the XAUUSD live monitoring window, which happens during the New York session, we positioned ourselves above the 1,896 to capitalize on the uptrend continuation, as we needed some confirmation here. Though when price came into the structure, it's indeed respected that level, but my strategy always needs some confirmations to happen, but it never happened around that area. I was actually expecting something like a double bottom structure around here before we can jump into a position, but that never happened. So in that regard, I said we should be buying anywhere above the 1,896, which of course finally did, and then price since then has moved over how many pips now? Over 80 pips in profit. And if you had bought again at the 1,900, you have about 40 pips in profit at this point in time. So it has been quite an interesting week for us on the XAUUSD. And for those who still have a buy position running right now, you know what we do. We want to be moving our stop losses to secure this current buy position. And from my own opinion here, looking at this current structure, anywhere below the 1,900 will seem most appropriate to lock in some profit. And of course, you know how we do it. We want to give enough room for price action to breathe, just in case we might likely be seeing some retracement into some structure before the uptrend continuation happens. So with a well-secured position at this point, what is going to be our plans for today's trading session? And in that regard, let's look at my commentary this morning on the XAUUSD. For those who are with me on the TradingView and Telegram platform, you will definitely have gotten this update. So this is my XAUUSD live commentary on TradingView. Okay, was it this one? Oh, not here, not this one. Hold on a second, please. So I think it's this one. All right, so this is how we have been managing our position on the XAUUSD for this week. And look at what we have here. So this morning, this was my update here. So I said we currently hold 2 buy positions with a combined profit of 120 pips as the uptrend maintains its traction. Let's ensure the securing of all positions while we're keeping a vigilant eye on forthcoming trading prospect, particularly in anticipation of housing data from the US economic calendar for today. So we are looking forward to the housing data, which of course is also a key indicator that gives us an insight into the health of the US economy too as well. I think that is coming up in about 3 or 4 hours from now, so we are looking forward to that one. And in anticipation of that event, we have seen a nosedive in the US dollar in the last 24 hours. And I'm of the opinion that market participants are at this point risk averse, in the sense that there's this Jackson Hole Symposium coming up on Friday. The Fed chairman is going to be giving a speech on Friday, and everyone is shifting their attention to this event. And as a result of this, majority are very careful. So instead of placing their bet or placing their funds on the US dollar, they have chosen to go for the what do we call it again? We call it safe havens. We have safe havens. We call them risk sensitive assets. So they are pushing their funds into risk sensitive assets, and one of them is the gold commodity, which we are monitoring right now. And as a result of that, we begin to see some traction in that regard. But that doesn't mean that this momentum will sustain. It depends on what comes up from the housing data that will be coming in from the US economy today, and of course what the speech of the chairman will be on Friday, and what the Jackson Symposium will bring for us. So from a technical standpoint right now, we're at a critical point where price is currently oscillating around the 1,904 level, and in fact this level has been a major selling niche since the beginning of the week. We saw what happened here on Tuesday, and in fact in the last 3 to 4 hours we have been seeing some selling pressure around this area, making the zone here a strong selling niche, at least in the meantime. But that doesn't mean that we cannot capitalize on buying opportunities around that area. Now, for those who are already profitable, those who have been part of our buy position since the beginning of the week, definitely you are very profitable at this point. Hence, you can afford to leverage on the profit you have made so far this week to capitalize on a trading opportunity above the 1,904 level. So what I will be advising us to do right now is to have a buy stop order sitting above the 1,904 for those who are with us since the beginning of the week, for those who are profitable. So what we are doing here is to leverage on the profit we had made so far this week to test waters around that area, and if it doesn't work, we are still going to be on the positive side of our gold portfolio. However, for those who are joining us for the first time, you've not been part of the journey so far, so you are coming in with a clean slate. I will be suggesting that we follow the technical expectation, which will come in the form of a breakout retest for confirmation before we want to be jumping into any position here. So on the XAUUSD, I still hold on to a bullish bias with the hopes that price action will break out of the 1,904 level to find new highs. And of course, if we do have another key level along the line as we continue to monitor price action, I will definitely let you know in the comment section of both my TradingView and Telegram platform. Now, in as much as we're looking out for buying opportunity here, we cannot ignore the potentials of sellers too as well. For those who have been with me in this community for a while, you know how we do it. We always want to keep our options as open as possible. The financial market is a very fluid environment, and for us to be profitable in the market, we want to be flexible enough to shift our perspective as soon as we see signs that price action is doing the opposite of our expectation. Now, if we are going to be considering the potentials of sellers at this point in time, look at what has been going on around the 1,904. We saw selling niche here. Yesterday, we saw what has been going on here in the last couple of hours. And if price selling pressure persists there, I will be considering selling again if price drops below the 1,900 area. Now, I could join before that. It depends on how the sell pressure happens. If it breaks back down below the 1,904 and continuous selling pressure happens around this area, then I could join early enough before the 1,900 area happens. But at this point, we could have a sell stop order below the 1,900 area, and depending on what happens here, if price drops and some selling pressure like lower lows and lower highs happen, we can join before the breakdown of the 1,900 level happens, hereby maximizing the potential of that bearish momentum. But that is if we start seeing selling pressure around this area. But at this point in time, I still hold on to a bullish bias, have a sell stop order below the 1,900 just in case the market turns against this current trend that we have here. So these are my views here on the XAUUSD. A very simple setup we have here. Our center of focus, at least for this morning, is between the 1,904 and the 1,900 area, where depending on how market participants react to this zone will determine where price action will be going for today. So if you have any questions as regards to my explanation, or you need me to do some clarification in an aspect you really do not understand, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, but if you still have questions, feel free to drop them in the comment section. So we shall be moving right into the last financial asset on our watch list for today. So the next asset on our watch list for today is the USDJPY, which has been doing pretty well in the last 24 hours. And like I said earlier, there's been a risk-averse sentiment in the USD market, as majority are dumping the US dollar in anticipation of the Fed Chairman speech, and of course the Symposium coming up much more later in the week, whereby putting their funds in risk in safe havens such as the gold we just analyzed now. And in fact, in that regard, we have been selling the USDJPY in the last 24 hours. And before we go into that details, let's run through how the week started for us. We actually bought at the beginning of the week. We saw an opportunity to buy. So let's run through that quickly. Then we go into the details of what our expectations will be looking like for today. So at the beginning of the week, we acknowledge a range. We acknowledge a range just right above our key level. Remember, we had this key level identified. For those who had not watched my video on the USDJPY, please do. The link is right in the description box below. They are duly timestamped. Use it to understand how to use price action to identify key levels and structures we have on this chart. So we have price action above the 145.00 area throughout the course of the week, and if price remains above our key level, we look out for buying opportunities, of course. So we had a range here where price was confined within the 145.490 and the 145.150 area to give us an insight into the level of indecision at that point in time. And coupled with that range was this descending trend line we spotted after connecting the series of lower highs since last week Thursday, as you will see here. And you know how we use our trend lines in this community. In this case, the descending trend line, we of course want to be looking out for patterns and structures to support the idea of selling if price action remains below our descending trend line. And if price breaks out of the descending trend line, we want to now shift our perspective to buying opportunities. And in fact, we saw a beautiful engulfing candle breaking out of that descending trend line here at the beginning of the week, which gave us a signal that we are likely going to be seeing some buying opportunity. And in fact, during our live session on Monday, we acknowledged this and we said we were around this area on Monday. During our live session on Monday, this was where we were, and we said we were going to be positioning ourselves just right above the 145.490 to capitalize on this bullish opportunity, which was exactly what happened. And in fact, we rode that move all the way to the upside, added more positions at the breakout of the 145.650. We added another one at the 145.950, and of course we added another one at the 146.300 area, which of course did not go as planned, as we saw selling pressure resume around that area, taking us out of all the buy positions we had. So at the beginning of the week, we were able to scoop over 100 pips thereabout for the start of the week, which is not bad at all. Now, during our live session on yesterday's session, of course, we noticed that sellers are beginning to negate buyers' attempt. We saw the first one happen here during the New York session on Monday. We saw what happened here during the early hours of yesterday, continued selling pressure around the 146.300, and at this point we decided that we are going to be joining any bearish momentum at the breakdown of the 145.950, as the market has already been giving us signals that price will go to the downside. And of course, we said if price climbs above the 146.3, we will be buying, but that of course never happened in the last 24 hours. So we capitalized on the selling opportunities here, and in fact, for those who missed out on this one, the market was so kind enough to give us the second chance as price came back to retest structure, and since that moment, price action has been dropping to the downside, giving us about 3 positions currently running in profit. So we had one here at the 145.950. We added another one at the breakdown of the 145.650, and another one right here at the 145.490, giving us 3 good positions running in profit at this point in time. So at this point, we have it. If you are taking advantage of all the 3 positions at this point in time, the first position here is running with about 60 pips, while the second position here is running with about 33. That's about 93 pips in profit, and the third one right here is running with about 15 pips in profit. So we have roughly over 100 pips in profit at this point in time. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. Now, the next thing we are going to be doing right now, you know how we do it when price action moves significantly well in our favor. We want to be moving our stop losses to secure all the sell positions we have right now. And from the look of this current structure here, I'm of the opinion that anywhere above the 145.490 and the 145.600 seems most appropriate to secure the sell position. Of course, we do want to give enough room for price action to breathe, just in case there could be some retracement moves or retest of structure before the downtrend scenario happens here. So with a well secured position at this point in time, what is going to be our plans for today? And for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten an update on how we are going to be managing our USDJPY for today. So, and for those who are not, let's quickly run through it together and see what I said here this morning to capitalize on any or position ourselves for any trading opportunities. So this morning I said here that selling pressure remains persistent as the US dollar grapples with waning demand, driven by investors' preference for risk-sensitive assets. Let's safeguard our positions while we remain vigilant for potential trading prospects, especially in light of the upcoming housing data release from the US economic docket today. So this was what I just spotted here this morning. I told us to capitalize on the breakdown of the 145.490, the breakdown of the 145.150, which appear to have happened at this point in time. So right now that we have a well secured position, what is going to be our plans and how do we intend to capitalize on this opportunity? Now, the first thing first you would observe here in the last 24 to 36 hours now, here's the fact that price action has been on a bearish momentum. So we have had lower lows and lower highs consistently. So if we connect the series of lower highs here, we have a descending trend line, which of course we shall be using to guide our trading activity for today. And what does this simply mean? Well, it means that as long as price still remains below this descending trend line, we have no business buying this asset. Now, if price remains here, we will continue to look out for selling opportunities. And of course, there are still tendencies for price action to come back into that area around the 145.650, which also shares a confluence with that descending trend line to incite a trend continuation to the downside. And if that does not happen, then a further breakdown of the 145.150 will welcome more selling opportunities, where the further breakdown of our key level at the 145.00 area will welcome more opportunities to maximize the potential of this bearish move. And there's one interesting setup I would like to share with you on the daily time frame, which I normally do not do on the Forex Morning Mastery, but for the sake of what things are looking like at this point, I think it is necessary I share it with you so that you can have a better perspective of what is going on from an holistic standpoint. So I think it's on the 4 hours time frame. Let me show you quickly. So if you look at the 4 hours time frame, for those who watch my video on the USDJPY, you will be familiar with this current structure. I shared with you the key level at the 145.00 area, which of course has two there's a fundamental and technical aspect to this 145.00 area. Now, this level last year was a zone where the Bank of Japan intervened to stop the yen from losing its value further. And because of the intervention that happened last year, there's been some level of fear around this area. So as soon as price gets around or above the 145.00 area, we have been seeing signs of hesitation, signs of anxiety around that area, pushing price to the downside, because majority are thinking that the Bank of Japan could intervene at any point in time, because this is the exact zone where this happened last year. Now, we saw this sign happen here in the month of July. That was last month. We saw at the beginning of last month, we saw a crash from that area out of the fear. Price action is back into that zone right now. And if you look at what has been going on here in the last 2 weeks, we can see price action, though it has broken above that area, we have a peak at the 146.550, but the inability of buyers to break out of the previous high is a source of concern here. So we have a lower high, which from a technical standpoint is a sign that a reversal pattern is gradually building up. Now, if we take a step further here, you will see that if we take into consideration this impulsive move that got us to this point, we saw the first touch, price came back into the key level. We saw the second touch, price was unable to break out of the previous high, hereby giving us a lower high, and it appears price action is gradually transitioning into what is looking like a reversal pattern in the form of a double top structure. And from a technical standpoint, a double top structure is a very, very strong reversal pattern. And when we start noticing this kind of reversal pattern, the next thing we want to be doing as technical traders is to identify a neckline, which we shall be using to validate that reversal pattern. And of course, interestingly and coincidentally, of course, we have the neckline situated at that 145.00 area, a level which I told you has both fundamental and technical factor attuned to it. Now, for us to confirm that this is a reversal pattern, we will need price to break down the 145, retest to structure to push price to either of these ascending trend line we spotted at the beginning of the week. So look at this trend line now. So we are likely going to see price drop into that area. Now, if price breaks down the 145.00 area, in fact, we must be ready for a very strong bearish momentum, which has a tendency of giving us a minimum of 200 to a maximum of 250 pips if price action does move in that direction. So I needed to show you what things are looking like on the daily time frame so that we can have a better perspective and also be on the same page to capitalize on this move if it does happen. So let's scale back down into the 1 hour time frame. So like I was saying here, we are in a sell position. So if this is the 145 level here, so if price does break down, we might be in for a very strong bullish momentum. But that doesn't mean that we are not going to consider the potentials of the buyers too as well. As you will see, this zone here has been a buying niche at some point, so we'll need to be very careful to see how price relates to the structure during the later part of the week, if price ever gets into that zone. So if we see reversal patterns there, like double tops, double bottom structures, signs that buyers are trying to push price to the upside, of course we'll have no choice than to join a bullish momentum. Now in this case scenario, we have an area here where we can actually buy, and of course if price does not get that far and instead we begin to see some higher lows here, then this trend line here will be what we will need to guide our trading for buying opportunities for today. So you can see how the trend line also shares a confluence with that 145.650. So what I will be looking out to buy the USDJPY today, if price does not get into the 145-ish area, is a breakout of that trend line, retest of structure before I want to be jumping into any buy position here. So this is my view here on the USDJPY. Very simple setup we have here. All we just want to do is mark out this level so that we can have a visual representation on the chart that we shall be using as a reference point to guide our trading activities for today. I think this is my view here on the USDJPY, and for those who still have the sell position running, I hope you've moved your stop losses accordingly to lock in your profit. So I think on this note, I would like to call it a day, but before I do, let's see if there are any questions whatsoever as regards to the current setup or any of the assets we have discussed today before we draw the curtain. So I will be taking the next 10 to 15 seconds to see how if there are any questions whatsoever before we draw the curtain for today. All right. Okay, I see some comments here. Okay, Jim Dares. Is it Jim Dares or Jim Dari? I don't know, but I call you Jim Dares anyways. Your analysts are too clear for questions. Oh, I'll take that as a compliment. Thank you very much, Jim Dares. Hadeni Babalola. All right, thank you very much. So, in the absence of no questions, okay, I can see a question here from Saeed Nasir. Do you think the dollar will be more stronger? Well, what an interesting question that is. Personally, I don't like projecting my thoughts on the market at all whatsoever. I don't like doing that. Instead, I want to keep myself open. I don't want to know if the dollar is going to get stronger or not. What I want to do is ensure that I understand the psychology in the market using my price action analysis skills to identify and position myself ahead of any opportunities. So if you have observed me critically well, and if you have been with us in this community, you'll realize that we don't have our baskets, our eggs in one basket. So we always keep our options open. We talk about the potentials of buyers, we talk about the potentials of sellers, and keep ourselves open for any of the opportunities that will happen. Mark out key levels, mark out trend lines, and use it to guide our trading activities going forward. Now, back to your questions. Well, if you would ask me, at this point, I wouldn't know. There are a lot of fundamental factors that can affect that sincerely. Now, for instance, we have the Jackson Symposium, which is coming up later in the week, and it depends on what happens there that will determine what our next line of action will be. Now, one of the factors that will likely cause some increase in the US dollar is if there is an intention to increase interest rate. If there's going to be rate hikes, then definitely majority will want to put their money in the dollar because of the high yield return. Now, if we take that perspective into the USDJPY right now, and the reason why the USDJPY has been rising since the beginning of the year is simply because of the disparity in the monetary policy of the yen and the US dollar. Now, compare it. What's the interest rate for the yen at this point is minus 0.1% compared to the dollar, which is at 5.0%. Look at the margin between that. It wouldn't make any sense for anyone to put their money in the yen at this point in time, unless the Bank of Japan intervenes, buying the yen from their dollar reserve. to boost the yen a little bit, at least for the meantime. I think that's the only situation that could drop the US dollar. But at this point in time, the USDJPY is still on a very strong bullish momentum. And what is going on here is more of a retracement phase of that bullish momentum. So if you would ask me that what is the trend on the USDJPY, it is more of a bullish momentum. Look at the daily time frame, of course. It is very, very glaring. Since the beginning of the year, we have been seeing higher highs and higher lows. So that is how I would answer your question, Nasiru. I don't know if I made myself clear or I was able to clarify your what will I call it? your inquisitiveness. All right. So in the absence of no questions, I think we are very much good to go, and I'm very confident that we are ready and prepared to capitalize on any of the trading opportunities that comes up during both the London and the New York session today. So we were able to treat three major pairs today. We treated the USDJPY, the GBPUSD, and of course the XAUUSD. And on all of these pairs, we were able to identify simple setups using only trend lines, key levels, and chart patterns to identify potential trading opportunities for us today. So I just hope that we be on standby to capitalize on these opportunities when they finally happen. And I do hope you marked out these levels on your chart. And of course, I will be giving you updates on both my trading view and Telegram as soon as I see any significant setup that comes up along the line. And then for the XAUUSD live monitoring window, I have the link already. So I would like to, I'm not sure I'll be able to share it right now. My screen here is asking me to sign in. And if I do, this will go off. Let me try one more time and see if it will work. And if it doesn't, I will be sharing it in the on my Telegram platform as always. So let's see. Okay, I think I can bring it up. It's no longer as prompting me for the password. So let's see. Okay, give me a moment, please. All right, so I just shared it in the comment section right now, the XAUUSD live monitoring window. We shall be going live again by 5-10 minutes into the New York session as we come here to monitor the XAUUSD live together here, see how we capitalize on both buying and selling opportunities utilizing only price action, trend lines, key levels, and chart patterns to identify potential opportunities. So it's on this note I would like to call it a day. Okay, I see your comments, Saeed. All right, you're welcome, Saeed. Thank you, Adeni Babalola. And please, if you have found this content helpful and useful in making your independent trading decisions for today's trading sessions, please support this project by clicking on the like button. Your likes are valuable to me, and in fact, it helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them too. Thank you very much in advance as you do so. So I look forward to seeing you guys in the comment section on both my TradingView, Telegram platform, and of course during the XAUUSD live monitoring window as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.